source of tax law. Oh, please remind me before we leave today. Maybe I'll do it when you're at the break. I need to give you all these handouts. These are the problem solutions to all the chapters 3, 13, 4, and 5. I get carried away sometimes and I find them up here at the end of class and everyone's gone home. So please, Bill, our handouts. We want to get a hernia. Give us more handouts. Internal Revenue Code is the primary source of law. Passed by whom? Who creates the Internal Revenue Code? No, it's not the IRS code. I had a big argument at the DuPage County Fair. Some guy wanted me to sign a petition against the IRS code. I refused. I said it's not the IRS code. It's the Internal Revenue Code passed by Congress. Congress. It's organized by subchapter, and see that crazy symbol? Looks like two F's. That's the section symbol. Code is subchapter and code section. Hey, we talked earlier, and we'll talk more later about S-corps. Guess what subchapter of the Internal Revenue Code? Guess which subchapter of the Internal Revenue Code deals with S-corps? What do you think? S-corps. So what subchapter of the code? S. Subchapter S doesn't make sense. That's where they got the designation of S corporation. Regular corporations like the Fry Education Group are under subchapter C. So they're sometimes called C corps. Now under C, under subchapter C, where we'll devote much of our attention, all the code sections start with the number 3. I think code section 301 is dividend defined. We talked today about section 351. That confused everyone. Corporate reorganizations are section 368. So you see the 3, you know that's relating to regular C corps. The capital gains and losses and capital assets, code sections all start with the number 12. 1201, 1231, 1245, 1250. So it's pretty neatly organized. Second primary source of tax law, the income tax regulations. This is the IRS's document. They take the tax code and they interpret it. In very complex language with very complex examples. It's like an outline. A, B, 3, C, 2. It'll start regulation section. Now if it says 1 point, that means it's an income tax reg. There's regulations for like FICA and all the other areas of taxes. And this would be under section 351. So those are your two primary sources of tax law, the code and the regs. And you'll have a minor opportunity to do a little research in that area. We used to have a course when I taught at North Central, not too far from here, it's a Naperville, where we did a lot of tax research. Most now that we're cutting course loads and stuff, we really don't have that opportunity. Now, what's second most important? Well, under the cumulative bulletin has 2 documents. Let's talk about the first one, revenue rulings, and then let's talk about private letter rulings. So, this one and this one. By the way, the first revenue ruling for this year would be 2005-1. Interesting to note, remember Y2K? The first revenue ruling issued in 1999 would have been designated 99-1. They didn't have the 19. So now that we're using the 20, it means if anybody's alive when 3000 comes, there won't be a Y2K problem. I try to have a social experience with you too, sorry. Because now, but it's interesting how they changed that. Now we have the full 4 digits of the year. Now let's spend a little bit of time on this. Revenue rulings are binding legal precedent. I better spell that because it sounds like I'm talking about the president. Binding legal precedent, P-R-E-C-E-D-E-N-T. My enunciation sometimes is not clear. Binding legal precedent, like a court case. So it applies to any taxpayer under similar circumstances for any year. Private letter rulings. These apply, private letter rulings, we'll go back to Rev Prox in a bit. Private letter rulings apply only to the taxpayer. Private letter rulings apply only to the taxpayer who requested the ruling and only for the year in question. So a private letter ruling only applies to the taxpayer who requested the ruling and only for the year or years in question. Well, Bill, that tells me the effect, but I still don't know what the heck they are. We actually had I've requested 3 in my time, and we actually had a student in the Tuesday class who has requested 1. What's happening here? You are contemplating a transaction. You're contemplating doing a transaction. And you want to get the Treasury Department interpretation. Remember, IRS is part of Treasury. You want to get the Treasury Department's interpretation of the law for that situation. Now, I've done 3. Let me tell you about one of them I did in the early 80s. My company, Chicago Bridge and Iron, CBI Industries, was a partner in 3 different oil and gas drilling partnerships. They were in the partnership format we talked about earlier. One of the partners decided, let's convert these to C Corps. Well, the partnerships had taken what was called investment tax credit on equipment that was used for the drilling operations. That was a 10% tax credit, but you had to hold the property for 7 or more years. Otherwise, you had to give back some of the credit. That was called investment credit recapture. And that recapture would occur even if you had 0 taxable income or a loss. So we were the major partner. So the tax manager came to me, because that's my job, and said, research whether or not the investment credit recapture would apply if we're simply changing the format of these partnerships. So I went to the code, I think it was section 48 or 38, and I went to the regs. And I discovered there was a 4-pronged test that explained how to avoid any tax liability when you're changing the structure of your entity. 3 of the 4 prongs of the test we met without any question. The 4th prong of the test, we met in spirit. Now this is pre-internet days, guys. So I typed up the proposed transaction. I summarized the law with a positive spin on my interpretation of the law. One interesting point that I did not emphasize was that in one of the 3 partnerships, one of the partners was going to drop out. So the ownership interest actually would have changed in that particular entity. I was sent to Washington, D.C., a female attorney, I remember her name still, Karen Davis, contacted me, and she and I did a lot of phone calling because we didn't have the internet then. Then an appointment was set up in Washington, D.C., and I took the tax manager of the subsidiary, I remember his name too, Joe Martin, out of Tulsa, and we went to D.C. to the Treasury Department, and we met Karen and her boss, which was an older female attorney. You know the situation, the mahogany table, Karen and her boss are on one side, Joe and I are on the other side. I was angry at Joe because the night before he had too much to drink. So I just kind of propped him up in the chair because I didn't want him doing any talking. You know, and I gave him a presentation, and there were questions asked. It only lasted a half hour, and handshakes. And they said, well, within 60 days we'll get back to you. Well, within about 30 days, Karen called me back and said, Bill, I liked your argument, but my boss is a strict constructionist, and strictly interpreting the language, you don't satisfy one of the prongs or tiers of the test. So the ruling is going to be adverse. So I went back to my boss, and he consulted the other partners, and they decided it wasn't worth doing it. It would have been about $2 million worth of tax liability. So they decided not to go with it. Now, Bill, that still doesn't tell me the distinction. The government takes those factual situations that are more likely to impact other taxpayers, and they become revenue rulings. The names of the companies are always removed, and those are published by the U.S. Government Printing Office. The number is the same as when it was originally issued, but they're organized by code section. The factual situations that are more unusual, esoteric, become private letter rulings. And those were not available except to the taxpayer who requested it until 1974. And an enterprising publisher, CCH, through the Freedom of Information Act, got access to all the private letter rulings. So for $2,500 a year, you can subscribe to CCH's private letter ruling series, and you can get access to all the private letter rulings. Names of the companies that have been deleted. Now,
these are the uncommon.
The uncommon ones are the ones that are private letter rulings. Now you say, Bill, wait, why would you want the private letter rulings since they're not binding on the law? Well, I've had situations where I had a private letter ruling, although it's not binding legal precedent, it supported my interpretation of the law. And it's the only ammunition that I had. So I know the IRS doesn't have to follow it, but at least it gives you something, or it gives you an idea of how the Treasury might interpret a particular situation. So I have cited private letter rulings when I've argued with the IRS. I say, I know this is not binding, but this is a really similar situation, and this is what the Treasury decided. And usually it works. My situation, do you think it was a revenue ruling or a private letter ruling? Going from partnerships to C Corps. Private letter ruling. I think the more likely situation would have been the reverse, going from C Corps to partnership. So I've had 3 private letter rulings. I never had a revenue ruling, because every time I had a situation, it was always really unusual. Now, revenue procedures, or Rev Procs, also in the cumulative bulletin. These tell you what you need to do. Let me give a quick example. We're almost done with this part, then we'll take a quick break, and then we'll come back for the individual stuff. Prior to the 1986 Tax Reform Act, for tax purposes, corporations use the allowance method for recognizing bad debts. The one that you learned in accounting, the allowance for doubtful accounts. If you look at it, 1120, that's the tax form for corporations. 1986 or before, you'll see Schedule F. That's the bad debt schedule. But the 1986 Tax Act said that for most corporations, the allowance method will no longer be allowed. So most corporations have to use the old direct write-off or specific charge-off method. Well, I went to some luncheons around this time, and these speakers would say, you know, we're going to get the double dip. We've already really accounted for some uncollectible amounts from customers in setting up our allowance or our reserve account. I know that's not an acceptable term for accountants, but tax people who aren't accountants often use the term reserve. And now we'll be able to deduct the amounts again when we identify specific accounts that are uncollectible. And I sat there at the lunches. I never want to embarrass anyone. And I just shook my head and thought, these guys must be smoking something. Sure enough, a revenue procedure came out. It said that you must pick up into income proportionally over the next 4 taxable years whatever balance you had in your allowance account as of December 31st, 1986. So you weren't double dipping. They did let you spread it over 4 years. And so you want to change your method of accounting for tax purposes. You got to get permission from the Commissioner of Internal Revenue. You file a form, 3115, and you go to the most recent revenue procedure, and it tells you what you need to include. Now, one thing I want to mention, I mentioned it Tuesday as well. Anyone know what a citator is? C-I-T-A-T-O-R. Anyone an attorney in here? Attorneys, I would say, what's shepherdizing? Citators, and CCH has an excellent one, by the way, for tax purposes. CCH, which is now a Thomas Reuters company, is one of the best tax services for practitioners. I could go on to that for years. But a citator indicates if the revenue ruling, the revenue procedure, the case, if it's still binding law, or if it has been differentiated in another ruling or case, or if it has been followed. So the worst thing that could ever happen to you is going into court, for example, and you've got a beautiful argument. And the judge says, I'm sorry, but this case was overruled on appeal by the Supreme Court. How about egg on your face? So you want to make sure, plus it helps you in your tax research, because it'll give you other cases or other rulings which cited this one. So always make sure you use a citator. The word shepherdizing, the Management 520, we have a shepherdizing actually assignment now. That's the one that it was always been used for all cases. But CCH has one, and Prentice Hall does too, just for law, just for rulings, procedures, and legal cases. A few other things here.